Hello everyone. In this video, we are going to talk about KYC, or we can say Know Your Customer. Sometimes this word KYC may be termed as Know Your Client, Know Your Customer, Understanding Your Customers. If we are going to open the account of the customer, or we are going to sell any of the product and services to the customer, so KYC or Know Your Customer plays a very important role. Important role in the sense, a new relationship that is going to form between banker and the customer, whether they are eligible enough to constitute a customer or not. So we're going to discuss in this particular video the concept about KYC, Know Your Customer, why it is important from banker's perspective, the process of KYC, means what are the important elements of KYC. So we talk about the concept of KYC. KYC means know your customer. So it is also known as KYC or KYC check. It is the mandatory process of identifying and verifying the identity of the client when opening an account, either opening an account or giving any kind of services to the customers, or periodically over time. So when we are talking about the second line, that is periodically over time, it means re-KYC. So it is a regular process as per RBI's guideline, that it is not once for all, that once you have taken the ID and address proof, once you have known about the customer, once you are knowing your customer, and then forget for rest of the life or rest of the time till the time the customer is there as a customer. Banks must make sure that their clients are genuinely who they claim to be. So there are no false representation, there are no false identities. So genuinely, whatsoever proofs you are handing over to the bank at the time of opening or taking any of the services, they are similar and they are genuine in nature, right? So bank may refuse to open an account or halt any kind of business relationship if the client fails to meet the minimum KYC requirement. It can be, suppose at the time of opening an account or taking any kind of services or applying for the loan, so bank has the right to refuse if bank does not find it and bank does not confirms the basic requirements, the basic submissions given by the customers, not as per the KYC norms. So bank has a right, and even after bank has asked about to submit the documents for re-KYC, then also if the customer is falling in that particular process, the bank has a right to halt or stop the business relationship. It may cancel the account. The few important terminologies related to KYC is that KYC in general sense related to the submission of ID and address proof. Each client is required to provide credentials to prove their identity and address, and both of these are known as ID proof and address proof. So at the time of opening an account or at the time of re-KYC at regular intervals, when bankers are asking for submitting their documents, so the main motive behind re-KYC or this is to prove that whatever eligibility criteria as a customer should confer, whether they are eligible enough for becoming or constituting a customer or not. So this is KYC documents. So for your information, I would like to share with you that documents like Aadhaar card, voter ID card, and all these things constitute the ID and address proof. Passport is the only document that can be considered in both ways. Now the another terminology is eKYC. So in India, electronic Know Your Customer or eKYC is a very recent concept. It is a process wherein the customer's identity and address are verified electronically through Aadhaar authentication. So UID card or Aadhaar enabled system. So with the help of biometric impression, thumb impression, your ID or the customer's ID and address proof data can be captured automatically. So this is the part and parcel of eKYC. Why KYC is important? So KYC procedures actually defines by bank involves the necessary actions to make sure that the customers are real and monitor risk. So this is the basic guideline in order to go for the KYC. These processes helps people to prevent and identify the money laundering activities, financing terrorism, and other illegal corruption schemes. Based on the RBI guidelines, bank may ask for re-KYC at specific intervals to keep the records of the banks updated. Bank may ask you, or after regular intervals, bank may ask you to submit your latest passport size photographs, to submit the copies of address or permanent address, or your ID proof, or your address proof time to time. So these are known as re-KYC. Now the objective of KYC guidelines is to prevent banks from being used intentionally or unintentionally by criminal elements for money laundering activities, for doing unethical, illegal activities, fictitious accounts, and all these things. Therefore, it is not only about submitting the documents, ID and address proof, that becomes a very important portion, but also at the same time, these KYC talks about four major key elements, and these are the customer acceptance policy, that whom you wants to make a customer, who is eligible to become or to constitute a customer, what are the necessary guidelines. So first point is customer acceptance policy, second one is customer identification, third one is monitoring of transactions regularly, and then the risk management. So one by one we'll be dealing and taking care of all these four key elements. The very first one is customer acceptance policy, which talks about that no account is opened in anonymous or fictitious or simply Benami names or Benami account. So one has to clearly define the eligibility, one has to clearly tell the proper ID, has to submit the proper legal documentation as far as which clearly indicates the identity of an individual. So it cannot be an anonymous, it cannot be an fictitious account, it cannot be Benami account, right? So banks should clearly define the parameters of risk associated with the customer profile, like low risk, medium risk, or high risk customers, depending upon the profile. So particularly and similarly with these classifications of risky customers or non-risk customer, or high or average or low risk customer, documents and other information should be collected of customers as per their profile. Not to open or close an existing account if the bank is unable to apply appropriate customer due diligence. So very first thing is, if the banker is not satisfied, if the banker is not able to provide due diligence, do not open the account. And later on, if it is found that customers are not submitting and adhering to the norms of re-KYC, they are having the right to close the account, but not on the grounds that anything which is beyond the law, right? So all the legal aspects of what is referred as customer acceptance policy, that need to be taken care. So bank are having the right either not to open or close an existing account if the bank is unable to apply appropriate customer due diligence. So time to time necessary checks should be carried on to ensure that the identity of the customer does not match with any person known criminal background or with banned entities such as terrorist, etc. So at the time of opening an account, if the customer is free from all the charges, but later on if it comes to the knowledge of banks that these customers or set of customers or anybody who is of fictitious nature, Benami account can sort of cases like Benami account or terrorist activities, so they should be clearly dealing with the customer acceptance policy, and that clearly talks about they close the account, right? So at the time of opening, if you are aware, do not open the account, and later on if somebody or something has been traced out, close that particular account. This is as far as customer acceptance. So the concept is, do not accept anything which is beyond the law, which is illegal in nature, which is of any, which is not genuine in nature. Breach of customer acceptance policy, and bank has a right to close or that particular account, right? That particular relationship also. Now, second point is customer identification process. Identifying and verifying customers' identity by using reliable independent sources, document, data, or info, whatever it is. So it becomes very important. So do not rely whatever the customer is submitting. It is important to have their own fundamentals approach, to use reliable resources, right? To have independent sources. To just say, for example, if any customer is submitting Aadhaar card, that can be verified with the help of the Aadhaar website or the government proofs or any other document, PAN card. So banks should inquire, banks should use the various independent source whether it is true or not. For customers that are legal person or entities, banks should verify the legal status through documents only. Authorized parties, so whether they are authorized to put their signatures or not. Say for example, in company's account, MOA, Memorandum of Association and Articles of Association, depending upon the case to case. Understanding the ownership and control structure of the entity, who is liable to up to what percentage, right? Who is the owner of the firm, what is the ownership and control structure. So banks has to check all these things. So this is customer identification process. Third one is the monitoring of transaction. So once the customer is accepted, it becomes the customer. Again, the monitoring of transaction may be possible. The PAN card is not updated or PAN card is not submitted in the account. Then also more than 50,000 transaction or transaction up to 50,000 or more than 50,000 transaction should be taken as the suspicious, depending upon from where, what are the various sources of funds. So all these things, so regularly identifying the abnormal and suspicious transaction. For suspicious transactions, banks have STR, suspicious transaction reporting system. So special attention to all the complex, usually large transaction accounts need to be given. Similarly, like for accounts having large cash transaction inconsistent with the normal activity of the customer. Say for example, if a salaried class employee or customer who is not having any large transactions over past few years, and suddenly there are transactions which are more than 10 lakhs in a day and of repetitive nature. So LTR is the term, that is large transaction reporting. It is to be maintained in separate registers so that the data can be maintained by the head fortnightly. Head here refers to the branch head or branch manager. So there are various registers like STR, suspicious transaction reporting, and LTR, large transaction reporting, which need to be taken care. And with these registers, banks are monitoring the transactions of the customer, and depending upon the transactions, they may ask for submitting the KYC, and they can ask the customers the reason, what are the sources of the funds and purposes, etc. Last point is the risk management, which talks about that customers are segregated into various profiles. Creation of risk profile of the customers, application of anti-money laundering measures, audit machinery should be staffed adequately with individuals as per bank policies and procedures. So RBI time to time have proper guidelines. Internal auditors, external auditors from RBI, they are also visiting the bankers in order to check whether all the compliances, all the processes are being taken care by the bankers during that particular audit period or not. So if any kind of loopholes are being found, so they can issue the necessary penalties, necessary guidelines. The audit can become unset, which means unsatisfactory. The individual accountability can also be measured, that why these processes are not followed. So all these things, concurrent internal auditors, the audit machinery has to be checked, and based on the customer profiling, the risk can be managed on the part of the banker. So this forms the basic introduction and concepts about the KYC or Know Your Customer. With these words, thank you everyone. Thank you so much.